Good morning, everyone. How are you guys this morning? Hold on one second here while I get you my monitor. So the market just opened. And it looks like we're pretty much taking over from where we left off the other day. Take a look here on the Raptor. And we'll just set this up for 2 contracts today. So you can see the overnight, not very active. This was yesterday's session. Tailed off a little bit during the Asian session. We closed right about here. A little bit of choppiness. Probably picked up a couple of trades on the Hawk, maybe even 1 or 2 here on the Raptor, but not very active for the most part. A little bit of a rally, pretty stagnant though going into the opening. And there we go with a little bit of a hard edge bounce. So still very early, just a couple minutes into the open now. We'll let the dust settle a little bit. We did get a nice little red bar buy here just out of the opening signal. Oh, and we did get a first micro macro cross there also, which is having some very nice follow through. Look at this, another red bar buy so soon. This is kind of odd. Here on the Hawk, we know the red bar buy tends to be a weaker signal that tends to develop near the end of a trend. So the first one, a pretty good buy because we would anticipate a test of the extreme. That occurred right out of the open. I suppose, you know, in hindsight, I could have taken it, but hindsight's always easy, isn't it? All right, now it's turning over into a first micro macro cross lower. Problem with this one, of course, we haven't had the test of the extreme yet, so we need to risk it rather deep. What I might do on this one is, if it engages, I may open it up, see if we can't turn this one into a little bit of a runner. Yeah, like Tony says, you don't need everyone, you just need the right one. How true. Jim's shooting some advanced decline numbers here, so about 1250 on the buy, 1270 on the sell, so they're pretty even up today. Still a first micro macro cross, a little bit of a retreat here. We'll set it up like so. Oh, now we're into a macro pullback. And now we're into yellow bars. So we'll nix that for the moment. Oh, and you can see why. Look at this. We're getting a red bar buy now on the eagle. Again, very early. This bar is becoming our signal bar. This bar right here that turned the ATR over. And the eagle is one of those tools that I don't mind taking an early signal on. But even here, we don't have a whole lot of structure at the moment. Okay, working on a possible late filter entry / trend change signal on the Falcon. Regular mixed bag. That always makes these trades more difficult, you know, when you're getting a mixture of signals across your tools. When the signals are confirming each other, it's always an easier trade to take. Jim's watching the DAX. He says it's bouncing up against the resistance for the third time. So, pardon me, suggestive that perhaps if you're watching the DAX, it may be heading a little bit lower, struggling to get through that resistance. You can tell here from the width of these bars also with the equivolume bars, definite struggle at this point. And you can see this bar is getting wider tick for tick. So also showing us a lot of market participation. We've essentially got the market sandwiched between 43.04 and 43.12. Breakout one way or the other should carry some momentum with it. The buyer's getting a little bit stronger. The advanced decline now 1,400 to the buy and just under 1,200 to the sell. So that's like a positive 200. All right, we're working on a trend change signal here now on the Falcon. We just produced the signal. Now you're going to notice that, oops, sorry, we're not in sync just yet. I need to set this. There we go. Now we're in sync. I was working a late filter entry signal. The filter had not come into sync just yet. I needed the filter to come into sync. You're going to notice, though, that the bar went out of sync here, but it only went out of sync for a single bar. Now, this is a very slight variation on the late filter entry signal, namely that if the trend line does go out of sync, just ever so slightly for one bar, you can probably still get away with it. Technically, the best late filter entry signal does never change color here on the trend line. But what happened is between these two bars, it probably traded just one tick too high. And that was enough to change the trend line color. So we'll see whether or not we're able to ride that out. First micro macro cross now on the hawk. And again, a lot of activity here in the above these yellow bars, so we can probably cover that trade a little bit tighter in anticipation of the market perhaps taking out these lows. And there we're back into yellow bars. So here we go. And we can cancel this order even though we're working on another red bar buy. Well, actually, that should print right about where our entry signal is. I don't like taking opposing signals. Even if I'm wrong, I hate being wrong both ways. So we'll see. If we get filled on the eagle, I'll cancel out of the Falcon trade. I don't like doing it this way. That's why I normally will only take a position one way and at one time. Because in order to manage this trade correctly, I have to allow the market to perform its swing. Right? And then I can manage my stops. But we got filled on the eagle trade, so we'll cancel this. And now we'll manage the eagle's position. Come on, get up there a little bit. Come on, at least to 43.20. You can do it. There we go. Okay, so you see the tail on this bar here? That tells me that that's probably a pretty good bar to roll my stop. If I'm starting to get a little bit anxious on the trade, I could roll my stop just below there. Chances are we're going to hit our break-even trigger anyhow. Nice thin bar showing not a lot of seller participation at the moment. The market pretty much neutral about these prices. There we go. Now comes the hard part. We're up against these highs. This is where the market turned before. We're at break even, so we're not in a risk position anymore, short of trying to ride out this little itty bitty swing. And I'll be a little bit more aggressive here and just go bar for bar. Come on. Ah, stinkers. Get up there. Nope. Wouldn't give it to me. Well, you see here on our Falcon trade, once this whole area got breached, the market went up to the next resistance area and our primary resistance here on the support and resistance suite. Still not a lot of structure to work with this morning. We'll give them a few minutes here. Macro pullback signal here in the hawk. Right, so you could set it up like this. It's struggling to stay out of the yellow bars. Just saw a yellow bar flash there. And there we go, yellow bars. So that will remove any temptation to take that trade. And here we come with yet another red bar buy on the hawk. Oops, I was a little bit late for that. So the red bar buy. With the red bar buys, it's okay to be more aggressive because we're working on a relatively short move, right? We don't usually expect the red bar buys to have huge follow through to them. Sometimes they will, but normally I try to get the red bar buy right on the hash mark. And you'll see why here in a moment. And because it does tend to be a lower probability signal, don't be shy about reducing your risk, or maybe just going in for a onesie, going in manual mode. All right, well, not very much happening at the moment, just bouncing around a little bit. I think we're going to see another little move here to the upside as we test the extreme once more. And if we get that test and failure, we might be in a position to watch the market roll over and head lower. Perhaps. All right, excuse me for just a moment. I'm going to be right back. It doesn't look like there's too much going on, so just let the market get a little bit more structure to it. I'll be back in a moment. Oh, so it looks like that red bar buy did have a little bit of follow through to it. Right here. Nice little red bar buy. Struggled somewhat, but eventually found the profit target. Now we're testing the extreme on a first micro macro cross. There's probably enough in here that you could still take a little bit of a move to the upside. In fact, I might risk it a little bit deeper below those swing lows. Still, we're still in dicey territory. See how we're just going sideways. Oh, and now we're into yellow bars again. So we'll cancel that. And there you go. Here we're getting a soft edge bounce. Well, actually it originated as a hard edge bounce, didn't it, off the trend line here. Don't know if we're going to get enough out of that to actually get to the top end of the trading range, but we're still in a position here where we might be able to take a trade. Oops, just hopped past me. If you are buying this one, I would probably recommend keeping a fairly aggressive stop. I don't think we want to give that one too much room. Oh, and here's our trading range, our first hour trading range. My goodness, or first half hour trading range, that went quick. We're trading near the highs of the morning session, or at the highs of the morning session. You can see our Geiger counter, pardon me, moving back and forth too. There's a little island, a little spike in the buying. Here's a little spike in the selling. Okay, they're laboring a little bit. working on a possible another red bar buy. This one, if we get it, I will look to sell the failure of it. I wouldn't be so interested. We've had already two red bar buys. Well, at least one within this recent trend. Come on, give me that red bar buy. Got a nice little test of the extreme here. Here we go. Come on, give me the rest of the signal. And what I'll do is I'll set up for a runner on this. And we'll just see if we can't take a little bit more. Come on, get up there. Give me that signal. There we go. So here's our red bar buy. I'm going to set up for the failure. I need to still cover the trade a little bit deeper. Ideally above the high even. That's the best place, but I think this will do. If it looks like it's going to be threatening, I'll roll my stop a little bit further back, another $10 or $20. And I'll even nix the break even. There we go. Once we're below this level right here, then we can take the trade to break even. Come on. There you go. All right, so we'll snap it to break even now. Hopefully we won't see a failure. And I'll get ready with something like my parabolics. Okay, come on, let's go. What are you guys waiting for? Let's get back down there to 43. Here we go, come on. I could even go with something more aggressive like the bar high-low, which will take me out on the first sign of a reversal. First little bit of weakness. Come on. Come on. Well, so we're getting a little bit of buying pressure coming in here. Looks like we might see the market peel back somewhat. We're back near the lows of the morning, I do believe. Yeah, pretty close. I thought we would see them tail off to 43. 4,300. That was my objective. Oh, we're going to get it. Oh, well, that's all right. How did we do there? Yeah, just a little over $100 on a single contract. Nothing wrong with that. Not as far as the scalper goes. So we could see a bit of a retest now that we've broken down through here. Technically, we are working on a first micro macro cross signal right now, which we know tends to be a higher probability signal. The problem with this first micro macro cross right here is there's very little structure to cover the trade. So at the very least, you would cover here. My eye would naturally be drawn to the macro line, or even where the crest in the macro line occurs. If the market's going to pull back, this may turn into a macro pullback, in which case you don't want to expose your stop. Or, you can perhaps anticipate the macro pullback and maybe look at getting a better entry. That's an option for you also. The advanced decline still kind of, well, getting more lopsided actually. 1,700 on the buy, Jim says, and just under 1,000 on the sell. So that's actually a positive 700, and yet we saw the market retreat and head lower. Now here we're coming with a red bar buy signal off of a hard edge bounce. Oops, wrong tool. Now again, I know you're hearing me say this a lot today, but the market structure is such that all our signals, I suppose we should even consider all our signals short term. So our band is still bullish, even though the market has retreated quite a ways. We came back with a red bar buy. I would have liked to have taken this one on the hash mark, but I don't think it's going to matter. Come on, get up there a little bit. If I can get another green bar out of here, I'm definitely going to become more aggressive with the trade. Or another bullish bar, I should say. Come on, buyers, where'd you go? So we can tell from the width of these bars at this particular price level that there has been some buying support here. Last chance for the buyers right now, though. Cloud crossing over, so that's not very good. Hawk into yellow bars, so that's fairly neutral. We don't have anything tradable there. Uh-oh. Uh-oh. Okay, first micro macro cross lower. This is not good. Hang on tight. We're about to get spanked. Scoundrels. All right, well, only good thing about that trade was that we didn't lose more than we could afford. I honestly thought we were going to see a little bit more of a test of the extreme off of this red bar buy. Did not happen. Oh, you're welcome, Mark. Mark says he's got the fix for the equivolume bars, and yes, they're seamless now. The problem was actually related to some apparently silly little glitch in NinjaTrader. The programmers, when they were programming the equivolume bars, well, I can't share all the comments that they did in their emails, but essentially it was, no, they can't possibly be doing that, and then, oh yeah, they're really doing that. So there was a little bit of a hiccup there. But the issue does seem to be resolved now. looking for a little bit of a reaction off of this 4300 zone. We're back now to the median line also on the support and resistance suite. Probably see some sort of little hiccup there. Lots of selling going on still. Right, so a little bit of follow through on a couple of those signals. Yeah, I know, I'm with you, Jim. Jim says, I think he was watching here the YM. And lately, Jim's been doing a little work here on the cloud width, showing overbought situations. And he said he's noticed that when the cloud gets 63 ticks deep, this is on the YM, it'll take you just below the first hard edge, although in this case it took you all the way to the second hard edge. He says, darn it. Wasn't expecting such a big move. No, neither was I. But there you go. You get it anyway. Okay, buyers and sellers getting a little busier here. You can see the width of the bars getting a little bit wider back to the median line. So a little bit more buying pressure, perhaps a little bit more selling pressure also. Definitely looks to be a seller's market today. After being so bullish the last couple of days, I thought we were going to get one more rally day. But the day's not over yet either, is it? Yeah, good question here from Paulie. Paulie's asking, so does the meaning of the wider bars mean that there is more buying or selling pressure? Yes. Essentially, the wider bars, volume always increases at turning points. And why would that be? Well, essentially, you've probably heard of the markets referred to as an auction, right? Essentially, this is a live auction that you're watching. And as a certain price will excite more buyers and sellers, there's going to be more market participation, hence the volume increases, and therefore the bar also gets wider. You're going to notice that, here, let's take a look at the Falcon. I think it's probably most pronounced on the Falcon. A lot of people always think that you need a lot of volume for a move to continue. And that's because we've all heard that you need volume on a breakout, right? If there's going to be a breakout, you need volume to go with it to sustain the breakout. Well, that's only partly true. You're going to notice here, look at all these thin bars, even though the market is moving a fair distance. See, thin bar, thin bar, thin bar. It's because when the market is rallying here, it's rallying on light volume. In other words, at this price, okay, let's start here. So market goes up, all of a sudden the sellers get real interested. How do I know the sellers got interested? Well, first off, they took control of this bar and also the width of the bar. Look, but compare that with the width of the next bar. There was hardly any volume on this bar, and yet it continued lower and lower and lower and so on. Well, that's because the buyers weren't really interested yet. Sellers were selling, sellers were selling, sellers were selling. All of a sudden we get down here and all of a sudden the buyers say, oh, 4,300, 4,302, okay, I'm getting interested now. Think of the same thing if you were at an auction or if you're in the supermarket and you go down the aisle and you see whatever, you know, your favorite cereal is at a very good price. Well, maybe you'll buy two instead of just one, right? Or if it's something more expensive, let's say something like your favorite coffee or whatever, but you get the idea. The principle has remained the same, whether it's at the supermarket, the gas station, or at the floor of the NASDAQ or the S&P. Now notice the buyers rallied it up. Oh, sellers all of a sudden got a little bit more interested. They brought it back down, and then the buyers supported it. Now you can't really tell. The width of these bars are marginal, but there was some added buying support to confirm the support at this level. And then look at what happens when the sellers get overrun at this level. All of a sudden it goes boom, 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 up, up, up. A little bit of a reaction here, and again the bar a little bit wider because there was a little bit more buying pressure, and then up it goes. Sellers, and funny thing is, it just stopped here because I think the buyers ran out of interest to buy. There wasn't really any selling pressure here, as you can see. I think we ran out of buyers. Nobody was interested in buying at 43.20, and so the market, there was a little bit of profit taking perhaps. Here's a second push by the buyers around 43.10. Some of the guys who missed out on this initial move down here think, okay, well, 43.10, better than nothing, so they try to run it up. But look at what happens this time. Last time the sellers saw the market decline here, they knew the buyers were running on vapors, and so this time the sellers getting a little bit more aggressive. Buyers trying to find it up, sellers finally taking control, and then same thing, starts coming down. And look at this bar here. Look at where the buyers start to dig in at 43.12, trying to defend their area here. Again, buyers who got late on this move at 43.10 thinking, oh, well, here's a second chance to buy 43.10, but the sellers, again, driving them lower. We get back down here, the bars start to get a little bit wider again. Why? Well, because we know this is an area of interest. So when you see the bars getting wider and narrower, that shows you where the buyers and sellers are most interested. So right now we're getting a little bit of width on this bar again. So obviously there is some buying interest at this price level around 42.88. So we're getting into a really good deal now, right? It's like driving down the street and seeing gas for $1 a gallon less, or if you're here in Canada, 50 cents a liter less. Well, I think you're going to stop and fill every container in the car with gasoline, right? So not quite that extreme of an example right here, but buyers, their interest is peaked at this level. So we're going to see some buyers buy in here now. We know where the sellers are applying some pressure. It's right here at this 42.98, 4,300 area. And we'll see whether or not the buyers can't post a little bit of a rally. But yes, the wider bars show you an area of interest. They show you where the buyers and sellers are especially interested. You don't always get a feel for who has control of the market. However, very often you can decipher it from the bar. So here we've got bars with tails on them and big fat bars at that. I would be inclined to believe that the buyers are taking control. Look at here on the Raptor, the next bar, just as fat, pushing back. So the thing you need to remember too with volume is you probably heard that Newtonian law, at least I think it's Newton, where every action has an equal and opposite reaction. So what you're looking at here, and I'm not going to enlarge the Raptor chart just yet because it really emphasizes the width of these bars. We had a lot of volume here, right, on this little hollow bar. We had a whole lot of volume. It didn't go very far though, did it? We came right back with yet a lot of volume. They look like they're very equal, and yet the bar didn't go anywhere either. So what does that tell you? There is a real fight going on here between the buyers and the sellers. A lot of contracts being traded and yet the market not moving higher. A lot of contracts being traded, the market not, well, it took a little bit of a hop lower. But when you see these really wide bars, very often that's a prelude to what is referred to as a washout, where the buyers and the sellers are, throwing everything they have into the market. Huge volume going through that price, and yet very little follow through. That's normally a prelude to a reversal. So when you see these big fat bars develop like this, and the market not really following through, it's one thing if we had a fat bar and then the market, like here, this would have been a fat bar, and then the market has some follow through. Okay, that's different. But then when you have big bars and no follow through, that's usually a prelude to a reversal. Let's watch this. We're working on a possible trend change signal now to the upside. After a monster move down to 42.80-ish. We're We're getting a green bar sell now. This should lead to a test of the extreme. Right? We should see a little bit of a move here to the downside, test the extreme. But what I'm going to do is I'm going to set up to buy the failure because I'm going to cover the trade below the low here. Signal hasn't tripped yet. I'm just getting the warning dots. And yes, I am getting a little bit aggressive here. Come on, give me that signal. Come on. Let's see, am I getting anything on the Falcon? No, not yet. The Raptor actually gave us a soft edge buy right here. Okay, it looks like we're going to get our test of the extreme. Oop. Test of the extreme now with our green bar sell. I can look to buy the failure, cover the trade below the low. The green bar sell, of course, our with trend and or counter trend signal. Oh, looks like they would have made the profit target. Oh yes. Now I may end up totally fooling myself and being on the wrong side of this position. But notice the width of the bar here too. I know there's sellers here at this level. Right? So where do you think their sell stops are? Their exit orders? Well, they're probably right here. So if the market reverses and trades above 42.95, I'm going to start tagging all these exit orders, which are buy orders, which in turn should see the market advance relatively quickly. Okay, first micro macro cross lower. Come on, get into those yellow bars. Show me that reversal. There we go. Early trend change signal here on the Falcon, which I'm too late for. As you can tell, I'm a little bit more bullish at what we're seeing here at the moment. Okay, it looks like we're just about to test 42.95. Now let's see if we don't get a little bit of a quickie move to the upside when they engage some of these orders. See if we don't trap some of the sellers out of their position. Sellers who sold right here. Come on. There we go. Okay, this slipped me a tick. Now it's building into a first micro macro cross. So the sellers once again pushing the market down. Now the buyers have got to come through and get busy. All right, so there's your first micro macro cross. Not a bad signal. You could enter either on the hash mark or above these highs. Nice thing is you can still cover below the low. Okay, let's go buyers. Get up there. I should have maybe nixed the break-even signal. Let's hold on to that down there. on. Oh, well done, Jim. Jim picking up 21 ticks on the YM. He went long at 68 and out at 89. Nicely done. This whole 42, 97, 98 region, very problematic. A lot of trading going on right here. This is where the market started to slow before from its decline. Hit 43, slipped to 97, 98 area, and that's what we're fighting with right now. All right, so see this bar a little bit wider. We're getting some buying activity. And what I'll do is, oh, it really wants to roll my stop up to break even. Come on, get going. I'm okay having my stop below this one here. Oh, it took me to break even anyways. Let's see, we're going to get another signal here in a moment. Oh, here actually on the Falcon. We're working on our trend change signal. And we're right up against the median line here, so a break of the median line could see the market move a little bit higher. Possible late filter entry signal here on our Falcon. Our trend line still holding, our filter out of sync, and the hawk waffling here on yellow bars. Okay, the Raptor giving us a failure signal, so a failed sell. This is a little bit more aggressive again on the tools. Just look at the Geiger counter here, how they're just trading punches back and forth, buyers, sellers, no real follow through. Right, we'll put that on the shelf. Oh, and a macro pullback now here in the hawk. So, just a whole host of different signals. I'm not going to get too heavy into this because I've got the Raptor trade going. Better get a stop loss enabled here. Okay, come on, buyers. Where'd you go? Okay, so you see how the buyers have made that little swing in there? Give me one more bar here, and then that's going to be my cue that this is really the best spot to start rolling my stops. Come on. There we go. All right, so I'm going to move into the parabolics now. Why are my parabolics not rolling? Oh, there we go. Come on. Just a tough morning. Yeah, didn't want to do it. Oh well. Yeah, they're really chopping about today. Well, the good thing is we've minimized our exposure on most of our trades, so oh, way to go, Jim. Jim bagging another 11 ticks on the YM, shorted at 15, he says, out at 04. Well done. Polly is asking, what are parabolics? Let me show you. Parabolics are, what's the best one to show you on? Parabolics are one of our stop strategies. This was developed by a fellow by the name of Wells Wilder. You may have heard of him. He's developed all kinds of trading tools that we use. His most famous invention is the RSI indicator, which is ubiquitous. It's almost on every charting package available. Well, one of his other tools are known as parabolics. The fellow's a mathematician, by the way, so that's why these things are very high math, to say the least. The parabolics get their name from the parabolic curve, which you see. These blue dots are the parabolics. Now, parabolics are actually, they can also be a stop, they can be a stop strategy or an entry strategy or both. Now, we only use them as a stop strategy because you can see here in a choppy market, parabolics have got you whipsawed several times. In other words, when the parabolic price is breached, you would buy, and when it's breached, you would sell. So you would buy here, get whipsawed, you would sell here, get whipsawed, you would buy here, get whipsawed, you'd sell here, get whipsawed, and so on back and forth until you finally caught a trend, and then the market went lower. But for a stop strategy, parabolics are pretty cool because what they do is they give you a little bit of added room to start the trade. And then when the trade starts to run out of momentum, you'll see how quickly the dots get in tight with the price. So say, for instance, we sold this rule of 3 signal on the eagle. So we're selling here, and let's say we used the parabolic for our stop strategy. We would be short, and our stops would be managed by these blue dots. So right now we'd be down here. And now as the trade, let's say we didn't take profit on target, let's say we're still open. As the trade runs out of momentum, all of a sudden we get stopped as the market reverses. And you can see that we managed to capture most of our profit, open profit, using the parabolic strategy. So when I'm in a position, pardon me, and I have a fair amount of open profit, I like to go to something more aggressive, like the parabolic strategy, or perhaps even the bar high low. The bar high low is even a more aggressive strategy. Now, I can't show you the bar high low in hindsight. I can only show it to you real time because of the way it displays. However, you're going to see that the way it is right now, I'm 1 bar back with only a 1 tick offset. That means if this bar continues higher, I'm going to continue to roll the stops only 1 bar back, and vice versa. If I set it on the high, we would be rolling our stops just 1 bar back, above the high, 1 bar back. So at the first sign of weakness, we would be pulling the trade. But like I say, parabolic's a pretty good strategy for managing open profit. A nice little first micro macro cross here, Actually, what I should do is we'll go back in with our profit target. A rule of, pardon me, a 4-arrow consolidation might be building here. Let's see if we get that fourth signal. That might be worth a short. No, didn't get it. But it does look like the market is still ready to head lower. At least for the short term. You'll probably see some profit taking and whatnot as the day progresses. Ooh, look at the width of these bars here. Buyers definitely getting a little bit more interested here at the moment. Pretty sloppy 4-arrow consolidation, but we'll close out the room with this particular trade. Looking for a possible move down to the 42.80 area. Come on, there you go. Normally, we like to see the 4-arrow consolidation a little bit more compact. Remember, the idea behind a 4-arrow consolidation is that it's essentially going to channel, or it's going to be, in this case, like a bear flag. Those are the best ones. When the market is making this kind of progression, and we get 1, 2, 3, 4 signals. That fourth signal does tend to lead to a pretty good breakout. And the 4-arrow consolidation is actually such a strong signal, it's the only hawk signal I will take off of a yellow bar. Let's see if I can find you a better looking 4-arrow consolidation. Well, this one only gave 3 arrows, but it's the same idea. 1, 2, 3. Oh no, actually that one did give us 4. So we have a market that's, in an obvious decline. Here's our pullback. 1, 2, 3, 4. Here's our fourth signal. And then the market regains some momentum. All right, you guys. Well, they're continuing to flounder around. I'm going to shut down the room here in a few minutes. Remember, tomorrow, Wednesday, is our open house room. So that's at the other venue. If you are trading this afternoon, I do anticipate a little bit of a rally. Nothing really pronounced, but I wouldn't be surprised to see the market trade back up here to this 43 region, 4,300. All right, I'll catch you tomorrow morning. We'll see you guys later. Bye for now.